A very good afternoon and a warm welcome to all the participants who have joined this session. I would like to put forward my gratitude to all of you who have taken out their times and joined the session. As you very well know, we'll be diving into advanced issues related to Input Service Distributor and walk through a practical step-by-step approach to filing ISD returns effectively. I would now like to take this opportunity to introduce you all to the speakers of today's session and esteemed partners of HNA & Co. LLP. Am I audible clearly?
Ishita, you are audible. You are audible. You are audible, Ishita.
Okay, sir. Thank you. I would now like to take this opportunity and introduce you all to the speakers of today's session and esteemed partners of HNA & Co. LLP, CA Ravi Kumar Somani and CA Nandini H. Gupta. Qualified as a chartered accountant in the year 2012, Ravi sir heads the Pune branch of the firm. He has performed indirect tax reviews across varied sectors and has guided clients on transactional structuring and workable business models under indirect taxes, including GST. He has given lectures at various professional forums on service tax and GST. Adding to it, he has written various analytical and issue-based articles on important matters concerning indirect taxes. Ravi sir has authored couple of books in indirect taxes, such as Practical Guides to GST Audit and Certification, published by Bloomsbury, and Self-Study Guide to Indirect Taxes, published by Asia Law House. Also to mention, he is a regular contributor of articles in newsletters issued by ICAI, MCCIA, GST Law Times. Qualified Chartered Accountant in 2018, presently Nandini ma'am is a partner of Pune location. She is a commerce graduate from Jain University. She is associated with Hiregange and Associates from 2014, right from her articleship. Being a part of Pune branch, she has handled GST audits and consultancy for various industries such as logistics, real estate, hospitality, automobile sectors, etc. It is also noteworthy to mention that she has authored booklet on tips to draft effective opinion published by Hiriganga Academy and assisted in books such as Compendium of Issues and Solutions in GST, Handbook on Center Sales Tax, etc. Also, she has given lectures at various trade and professional forums such as ICAI, MCAI, MCCAI, and Hiriganga Academy. Okay, I would now like to ask Nandini ma'am to take the session further ahead.
Yes. Good afternoon, all. So, thanks, Ishita, for giving the brief introduction. So, today's session, we'll be taking it in a little podcast manner so that there is an effective and a better communication. So, firstly, is this ISD a new concept? Was this ISD existing earlier? Are there any precedents already available, or is it completely new and we're just starting it? Ravi sir, would you like to just throw light on to this entire background of this ISD?
Yes. Thanks, Ishita, for the introduction.
Sir, you're not audible.
Hello, am I audible?
Yes.
I'm audible, right? Yeah.
Yes.
All right. Yes. Thanks, Ishita, for the introduction. So, what we have done is between Nandini and myself, we've decided to take this more like a Q&A, like a podcast rather than a seminar or a session. The idea is to try to understand what are the issues and queries that are coming in the context of ISD and try to step by step arrive at some answers to these queries. The context of this program is more on the issues. So while we will talk about the basic of ISD, but the larger discussion in today's event is on the issues that we are seeing, either legal issues or practical system-based implementation issues would be the focus. If you would want to understand the basics of ISD in detail, there are sessions that we have done in the past for the same. Now, coming to the question which Nandini has raised, is to give a bit of background about ISD, the context, the concept, and why ISD is implemented in India. So first, to give a brief history, is that ISDs are not a new concept. It was also there under the erstwhile central excise service tax regime as well. It was also there when GST law actually got implemented on 1st of July 2017. Also, there was the law of ISD which was in place. However, now on 1st of April 2025, they have made it mandatory. In fact, not just made it mandatory, they've also a little bit tweaked the provisions of the law. But only one important thing that we need to understand is that why we cannot simply look at the ISD, what was there in the past, and try to implement that for current ISD regime, is because the context or the objective is different. The ISD, which was just a minute. Yeah, the ISD, which was there in central excise and service tax, was more of a facilitator for the assessee, meaning the assessee, the central excise was a unit-based law, premises-based law. So the liability or the levy of central excise was to that specific premise, the boundaries of the premise which is registered under central excise. It was an area-based law. It used to so happen that there were many expenses that the head office were incurring, on which there was this SENVAT credit which was there. And since head office was not doing any manufacturing, or from head office there was no provision of service, they were raising invoices from the other location from where the manufacturing was happening. Now, this was leading to accumulation of credit, SENVAT credit in the head office, and hence it prompted a mechanism of ISD to distribute the credit from the head office to the manufacturing locations. However, if we strictly see when GST law came, this old principle of transferring the credit from head office to the manufacturing or a supply locations was actually not required in GST, because GST was not a area-based or a premises-based law. It was a pan-India law having registrations in each state. So if you have a registration in a state, at a state level, there was a single GST number, or all the credits were sitting in that particular state GST number, and you could utilize irrespective of for which division you are using this. There was no restriction when GST law got implemented. Strictly speaking, ISD was not required in the GST law. However, it was there, it came, hence many businesses felt, it is optional. So there is no requirement to have this. In fact, there was a lot of confusion whether ISD is really optional or it is mandatory. In 50th GST Council, they brought it as a part of recommendations also, which was also clarified in the circular 199 very clearly that ISD is optional, it is not mandatory. While they said that in the 52nd GST Council, they also said, but prospectively, we want to make it mandatory. Hence, now we need to understand that ISD has prospectively from 1st of April 2025, it has become mandatory. However, the objective of implementation of ISD in GST is different from the objective of implementation of ISD under the excise. Under excise, it was more to facilitate the taxpayers to take the credit. Whereas under GST, it is more to facilitate the government, because department wants that the money should go to the right government. So let us say there is a bill that is sitting in head office, place of supply head office, let us say Maharashtra, the tax is collected by the Maharashtra government. If it is not distributed, the tax continues to retain only with the Maharashtra government. Businesses were doing cross-charge, but over cross-charge, government did not have control. Valuation was always a question mark in case of cross-charge, and few businesses were doing, few were not doing, and each adopted their own valuation mechanism. Hence, there was no control. And then there was Rule 28, which made a relaxation on the valuation. So many times the valuation, even if it is nil, it was acceptable. Hence, government is worried if ISD is not there, then it is possible that the states having head office locations or the corporate office locations would undue get advantage of extra GST collection, which doesn't get distributed to the actual respective states. And so the point which I'm trying to make is that the objective of implementation of ISD under excise was more for the benefit of assessees, whereas under GST, it is more to facilitate the department. It is to see that money goes from the right treasury, from one treasury of the government department, the money actually goes to the other treasury of the government department. So in fact, when this entire cross charge also came, there was a lot of confusion whether cross charge is required to be done in GST or not when GST law got implemented. Then this judgment came in 2018, not judgment, rather advance ruling, that of Columbia Asia, that even employee cost is to be cross charged and all those things. I think that's where businesses started doing cross charge of various services. They started doing cross charge. Cross charge in itself was a confusion. Nobody knew what they were cross charging for, but it was like, okay, some kuch to cross charge karo take wo service, it shows as if there's a supply of service, and there was all this thing that was being done. Businesses opted for cross-charge over ISD prior to 1st April 2025 for sheer simplicity, because cross-charge had a lot of flexibility of adopting valuation, the way you want to charge and all those things. And it was very simpler in implementation. Hence, they went for cross-charge in the past. Only once 50th GST Council meeting came, all this confusion again restarted, and they told that they want to mandate the ISD in future. Yes, Nandini. So Nandini, does that cover the basics or the background, or you want me to cover something more on this?
Right, fair enough, sir. Fair enough. The background is now covered. So once this 52nd GST Council meeting came up, then how these issues are addressed, how the earlier past issues in the GST period at least is addressed. Can we take up that?
Okay. So in the past, there were a lot of disputes as to, first of all, whether the cross charge is to be done or not to be done. That was first fundamental dispute. If it is to be done, what should be the valuation was another big dispute, and how this entire thing has to work. The best part is the 52nd GST Council. In fact, that circular which has come, this is a circular which was issued, Circular 199. Circular 199 came up with 3 scenarios. What they have mentioned is, if there are services which are procured from third party, then those services can go under ISD. But since ISD is not mandatory, it was not mandatory at that time, you could also do cross charge. In fact, they went on to say that ISD is optional. Even if you have not done ISD, it's okay. You can do cross charge for those services. And if the branch office is eligible for full ITC, then we will not question the valuation. You can adopt whatever valuation that you want to adopt. In fact, they went on to even say that employee cost is not required to be added in the valuation. They also told, even if you don't raise an invoice, even if you don't raise a tax invoice, even the nil value of invoice will also be accepted. Even if you don't raise invoice, we will accept that the value is nil and there would not be any litigation. However, if the branch office is not eligible for full input tax credit, then obviously all the questions of valuation and all those things come into it. How do we analyze whether the branch is eligible for full ITC or not? I'll cover that as a part of later in the discussion. Having said that, the point which I'm trying to clarify or explain, in the past, prior to 1st April 2025, if you have got any disputes relating to cross charge of, from head office to branches or branches to head office, you can actually contest those cross charge basis Circular 199, because luckily, very rarely this happens. There will always be those 1 out of 100 circulars which actually clarifies properly in favor of taxpayers. I think Circular 199 is one of them. where they have clearly clarified that there is no need to charge in those cases. Valuation, even if it is nil, it would be accepted. So that is one good thing in circular 199 that has been clarified. Now, as I mentioned, they have given birth in circular 199 to a new animal, and that animal is called as internally generated services. Now, this particular thing has actually given rise to a lot of confusions in the ISD regime that now is getting implemented effective 1st April 2025. I'll come to the confusions that are coming out of this internally generated services. Now, firstly, this term internally generated services is not defined anywhere in the GST Act or rules or anywhere. It was first time brought as a part of this circular. What they have mentioned is that if there are branches which are providing, there are bills, HO is taking bills or commonly taking services for all the locations from third party, that will go under ISD. But if the HO through its employees is providing a support to its branches, that will not go under ISD, that will go under cross charge. And this position remains even after 1st April 2025. So just pay attention here. What I'm trying to say, the cross charge as a phenomena, it is incorrect to say that cross charge as a phenomena is no more there after 1st April 2025. After 1st April 2025, also cross charge as a phenomena is going to be there if there is an internally generated services, and then you need to do you need to raise a tax invoice, follow the valuation rules for if there is any supply of service between HO to branches or branches to HO or branches to branches. What is that cross charge and all those things? What do you mean by internally generated services? I'll come to it a bit later. But yeah, for time being, you can just assume that this was a scenario 2. Even today, internally generated services is not defined in the GST law. And then they also mentioned scenario 3. In scenario 3, they went on to say that in case of internally generated services, the salary of employee of the HO is not to be included in computing taxable value. So that the valuation, it actually brought down a lot of litigation that got created because department started adding the salary cost of employee also while calculating cross charge. So they've clarified in this that's not required. So like that, they've given scenario 1, scenario 2, scenario 3 in circular 191, trying to clarify the past. The past things actually got amicably clarified prior to 31st March 2025. Yes, Nandini.
Yes, sir. Yes. So once this up to 1425 is all cut off. So what is the law which got changed? What is the definitions? What are the changes in the act and rules exactly which is made to give the broad principles of input service distributor?
Yeah. So only till the time we felt that now they have introduced a lot of clarity, sometimes government doesn't like it. So they thought they should change. And hence they brought this change to the definition of input service distributor. So if you see the definition of input service distributor earlier, the old definition, it stated input service distributor means an office of the supplier of goods or services which receive tax invoice towards receipt of input service and issues a prescribed document, all those things. But when you read the amended definition, it said input service distributor means an office. Again, that part remains the same. I'll come to that last 2 lines. Just be with me on the last 2 lines of the definition. There it says, for or on behalf of distinct persons. It means the ISD being an office who receives tax invoice towards the input services for or on behalf of distinct persons and liable to distribute. So this is where it is being made mandatory. They say it is liable to be distributed. It is for or on behalf of distinct persons. Hence, it becomes really important. let me also go to section 20 once, and then I will actually dissect this entire thing in detail. Section 20 again talks about the manner of distribution of input service distribution, which uses the word any office of the supplier of goods or services or both which receive tax invoice towards the receipt of input services. See, please understand, everywhere the word is input services, which means that ISD as a principle is only applicable for input services. It is not applicable for inputs and capital goods. Please remember this particular point. Here, the language is changed, shall be required to be registered. In the erstwhile section 20, it was stated as may register. Here it says shall be required to be registered and shall distribute. It means the entire mechanism has been made mandatory while it was earlier optional. And then they have brought up certain principle in mechanism in which, the tax can be paid by a person who is liable to pay tax under reverse charge mechanism, that I will anyway explain in detail. But then this is a broad contours of the change that has been made. Now, when we actually try to understand and dissect this, both section 2 as well as this section 20, these are the terms that become really important for us to understand. One is an office. So who must register under ISD is somebody who is an office. Then there is something called any office, of the supplier of goods or services or both is required to, distribute. Whom to distribute? If they are receiving any tax invoices for or on behalf of distinct persons, they are shall be required to distribute, liable to distribute, and shall distribute the input tax credit in respect of such invoices. So this is what are the terms that are really critical to dissect and understand. Now, what we need to really do is understand these things in bit more detail, because they say that an office who receives the tax invoices of input services for or on behalf of distinct persons, that's the language. So how do we really dissect this or understand this? That's where we need to probably go in bit more detail to understand. Yes,
So if we
Nandini.
see offices also, there are regional office, there is a shared center, there is a branch office, there is a divisional office, multiple office spaces are there. How do we read this? Who is actually office?
Okay. Unfortunately, the term office is not defined in the GST law again. It is also not defined in the rules or any other portion of the GST law. So we would have to interpret this term office in a more general way, in a more practical, implementable sense. This has to be interpreted. So as Nandini rightly has put up, there can be HO, corporate office, there can be multiple head office also. There are our clients who have got one head office in Mumbai and there is a corporate office in Delhi. There can be a scenario where there is a registered office in some other location. When I say registered office, registered as per the Companies Act is in some other state, while the actual corporate office is in some other state. Then there are regional offices, zonal offices, branch offices, there are warehouses, sales offices, R&D centers. So does that mean all these are offices and everywhere you need to take ISD registration is one, fundamental question that comes. So to just explain this point further as to what really the office is, we need to understand this in a very, very contextual sense. So we've tried to understand this in more of, indirectly what the government has given at some other places and trying to decipher as to what the office is. When we look at the registration portal, when we register ourselves as GST registration, when we take, and when we give the nature of the business activity carried out at the premises, there they have specifically categorized one field as office/sales office. And if you see, they've segregated manufacturing as different, retail as different, warehouse is kept separately. So which means a warehouse cannot be an office. in a general sense. A manufacturing or a factory cannot be an office. A retail store at the, where the customers are, the customer's collection point cannot be an office. The distribution point cannot be an office. In a general sense, since it's not defined in the law, we would have to read it like this. Very interestingly, in Circular 199, which department has issued, they have mentioned that head office located in state one and a branch office located in other states. The HO procures the input services for all the branch offices. Indirectly, by giving this example, of course, this is not the legal text, so we cannot interpret those terms as it is. But through an example, government is trying to say that office, they want to cover more of a head office is what their intention is. While, since there is no legal text of what is office is defined, so we need to go by more of purposive interpretation. Then there is a judgment under SISTAT earlier law, wherein it is mentioned that even a zonal office or a regional office can also be called as an office for the purpose of ISD registration. This is a judgment under the past regime, that is the central excise regime. Now, when we have to really marry all these, things, a view that emerges is that head office generally, which is a cost center, where there is no supply of goods or services happening from that cost center, would definitely go as an ISD, provided other things of ISD also are satisfied. Head office would go as a ISD. So far as branch offices are concerned, branch offices are generally, while that is also an office, but the entire definition says office which receives tax invoices for or on behalf of other. Hence, generally, in a general scenario, branches would not receive the invoices for or on behalf of other locations. Hence, that would get out, although it's an office, but that would not get out from the other leg of the definition of ISD, or that's a requirement that's there in section 20. As far as the zonal offices or regional offices are concerned, generally, the zonal offices or regional officer having the having the in charge for that zone, let's say west zone, south zone, east zone, north zone, all those things. Now, if the zonal officers are receiving small invoices here and there, let's say for the respective zones, and largely it's segregated or distributed, then there's no requirement to register as ISD. However, if there's a significant activity that happens at a zone, and the major invoices for that zone, common invoices, comes only into that zonal office, then yes, ISD registration also is required to be taken at a zonal office. This becomes really relevant when we look at implementing ISD for insurance companies, banks, where the zone, a lot of things are actually managed by the zone itself. It don't even go to the head office. So it is possible that insurance companies, banks, and all these other financial services businesses might have to take multiple ISD numbers because that zone is common for that entire area. Correct? Having said that, if there is a little bit of common invoices, we don't recommend to go for ISD and take such an aggressive view. It has to be, as I mentioned, there's no literal meaning, so has to be read more on purposive and objective-based interpretation. Correct? When it comes to R&D centers, I would suggest that has to be looked at facts of each circumstances as to what exactly is the use of R&D center, whether R&D center is used as a support function, or R&D center is used as a cost function, or R&D center in itself is also providing services leading to profit center. Depending on that, a view has to be taken for R&D center. Similarly, sales offices, the sales offices are largely having the objective of sale for that respective office in that respective state. Hence, sales officers would not be doing activities for or on behalf of other distinct persons. Hence, they would also not qualify under the ISD registration. So largely, the intention of the lawmaker is to cover ISD for head office and the larger regional zonal offices. However, if there is a branch which receives a lot of common services for other locations, there's a possibility of ISD number that can also come in, provided they do a lot of common things for other locations. And if it is significant activity, one needs to look at. Otherwise, largely, that will not come into the play. Whether one needs to take multiple ISD numbers, is it okay? Yes, if the business requires and the legally that is falling in, then you might have to also take multiple ISD registrations. Practically, we should see how we can avoid that by asking the bills to be given at the respective locations. Warehouse, in our view, cannot be called as an office, and that would be not be under the purview of ISD per se, merely by mere nature of its premise. So this is how we would try to dissect the term office. And please don't hold me for what I have told today, because I'm only trying to read something that's not defined in the law. But we are trying to see how do we purposively read this to practically implement and taking cue from the past. Yes. So Nandini, does that answer? I'm sure it may not answer your question, but at least that's an address your view on what is office.
Yes. I think broadly, at least as a thumb rule, you've given us what is office from past and relevant information which is available. So the next question when we went through the ISD is for and behalf. What is common? For and behalf. How do I determine whether it was common? Okay, common, a general understanding could be given, but for and behalf of, how do we interpret this? The next term, if at all, that can be put.
Yeah. So I think in this GST law, government wants us to interpret things that we don't know how to interpret. They've simply given the word for or on behalf of distinct persons. How can one interpret for or on behalf? And that too, when we have to interpret in such a contextual manner and apply these interpretations to practical business scenarios. I can tell you, there can be two arguments, absolutely convincing arguments when we try interpreting this term for or on behalf. I'll try to share my experiences, my views on this. So when we look at or when we break these words for or on behalf, for is very direct, where somebody has taken a particular input service from a third party for the other person. Let us say in our organization, the HR function is done at Bangalore. So HR has taken a HR software. So that is taken for all the branches. Although the expenditure is incurred at Bangalore, the bill has come in Bangalore, but it is taken for all the branches. So that is generally, what is for. On behalf of is representational. Let us say, that particular thing, ideally, there's a particular service that ideally should have been only for the branches. But on behalf of the branch, the HO has taken the bill and then they later distribute that particular, although it was for the branch very clearly, but on behalf of branch, someone else has taken the, bill. So for or on behalf, this is how, the interpretation has to be. So for is more direct. On behalf of is more of, I would say as a representative of someone is like that. This interpretation has to be done of or on behalf of as a language. Having said that, whether the issue that comes in, where do we really draw the line? Where do we really read this? Should it be read in a restrictive sense? Should it be read in a liberal sense? Should it be given a wider import? Is where the question or the dispute that comes in. Now, here, I would like to just bring in a concept of internally generated service and ISD. If you all know, I talked about internally generated service about 15 minutes back. Now I want to explain that in a bit more detail. So, if there is an internally generated service, then there should be a cross charge and not ISD. But if there is the bills of the third party received at one location for or on behalf of other locations, then it has to be ISD, correct? So when it comes to internally generated services, there has to be a supply. There has to be clearly be a supply of goods or supply of services from one location to the another location to be falling under internally generated services, because you are going to raise a tax invoice And hence, once you are going to raise a tax invoice, you are going to levy a tax, then it has to qualify the charging section, which is section 7 of the IGST Act, and levy section, which is section 9 of the CGST Act, So the more internally generated services, whenever somebody decides that no, we don't want to go under ISD, we want to raise a tax invoice and charge to our other locations, then it is very important for one to justify there is an express supply of services or goods, whatever. To give an example, let us say in our office, I've given an example of HR software, right? So that is a scenario of ISD. Now let us say that there is a a tribunal appeal that is to be done, and the matter is pertaining to Chennai location, and the tribunal is in Chennai, but the client is in Pune. Though Pune does the entire drafting support and all those things, but when it comes to appearance, the Chennai team of HNA does the appearance. So in that case, since the contract of the client is from the Pune, entire 100 rupees, both for drafting and also appearance, Pune will bill to the client because the contract is entered with HNA Pune and the client. But since there is a support or the service given by Chennai by actually appearing on the ground to the Pune location, there will be a cross charge. That is an internally generated service. There is the supply of service in this scenario. Very clearly, this is a cross charge. If I have to make an application of this in a general other business scenarios, there can be warranties, extended warranty supports given by one location to other locations. Sometimes we would want the after sales support to be at a particular location while the actual billing is happening from the HO. So while entire billing is happening from HO, but the support team is sitting in, let us say, a location which is actually giving support to the HO, those things can come as an internally generated services. Say a customer, you have sold a product to a customer, giving them a after sales support also. And let us say tomorrow some problem or defect happens. So your local support team is immediately going to go to the customer and address that issue. But that service which a local team has done to the customer on behalf of HO, there is an internally generated service for which the local company will have to do a cross charge to the HO. Similarly, internal generated services can be there from HO to branches, branches to branches, branches to HO. There can be all types of combinations. So business to business, this has to be looked at. So when employees of a location are coordinating and supporting one another, that is where an internally generated services come into picture. Now, the reason I wanted to explain that, because now I want to give you the distinction between ISD and internally generated services. Now, when we look at this circular 199, circular 199 actually gives an example. It says the HO procures some input services, example security service, for the entire organization from a security agency, which is a third party. This is under ISD, which means if a HO is procuring certain input services, let us say security or housekeeping, for the entire organization, since this support is taken from the third party, there is no internal employees who are involved or supporting one another. Third party is giving the support service to the HO, which again is for all the locations. This is a scenario of input service distribution. Whereas, let us say HO, in the same circular, there is another HO also provides some other services to their own branches offices. That is where the internally generated services come into picture. Now, where the confusion comes. Okay, before that, there is one judgment of Tribunal Delhi pertaining to the erstwhile regime, where they have mentioned that head office rent is an ISD phenomena because it is a third party expenditure for all the locations. Head office works for all the locations. Now, the confusion comes now because they have simply told in that circular, if you see, HO also provides some other services on their own to the branches, other services. Unfortunately, the definition of service in GST law says service means anything other than goods. Hence, it is very, very wide. Hence, the phenomena of internally generated services definitely is there. I've given you a couple of examples where it is very clear that there is an internally generated services. But then when we go deeper into things, it is possible that internally generated services also there in deeper aspects. One needs to look at each type of business and accordingly see whether at all there is internally generated service or not. Correct? Just to give you some examples. I'm only trying to give you all this as an example. So please, I'm giving this as a disclaimer. Don't say that this is a conclusive, because for various expenses, if we say it is common or if we say it is internally generated, it can be for a respective facts. Since ISD, once it is implemented, it is very, very factual and very, very transaction and business specific. So please don't hold me that, sir, you told that this is common or this is ISD or this is IGS. I'm only trying to give you perspectives in today's discussion because you all know we are trying to interpret something that's not defined. Audit expenses. If you ask me statutory audit expenses, very clear one can say that statutory audit fees is common for organization as a whole and should go under ISD. Whereas when it comes to internal audit, stock audit, branch audit, if let us say the company already does it, internal audit for each of the location and respective locations, the bills are there, then it should not go under ISD because the bills are already taken at the respective locations. Similarly, let us say that the head office appoints the internal auditor, asks the internal auditor to bill to the head office location, but the internal audit is done for all the branches, then that would go under ISD because that is a common service taken from a third party for all the locations. There can be a scenario where, especially, let's say very, very large organizations. I'm not talking about smaller companies, but let us say some really large companies, 1,000 crores, 5,000 crores companies. They would have separate internal audit department. Now that internal audit department is taking the services from this internal auditor, various other auditors, getting the audit done for all the locations. In that scenario, it is possible that the same internal audit service, same taken at one location, can be a scenario covered under IGS, internally generated services, being a cross-charge scenario of support provided by one location to another. Hence, it has to be looked at from the lens of the facts of each case. Rent of head office. Rent of head office, I've already told that goes in a common because there is already a judgment, and head office pure, the one that is a head office, the people working for, all over India, the rent has to go into the common. Global cross charge. Many companies get this global cross charge on account of expat, IT, HR, management fees, R&D, IT, all those things largely goes under common. But then one need to also see what that cross charge is for. There can be a scenario that a cross charge is towards the R&D which is done for a particular product. Then it may not be for organization as a whole, and hence that is not under ISD. It may be possible that the cross charge is towards a royalty, which is towards basis the number of items produced, production based royalty, or a specific IP that has been shared, which is helping in the production, or which is an intelligence or a patent of the production, and it is only charged basis of products produced at a manufacturing location, then that may not go under ISD also. So same expenditure may in a scenario would also go under ISD, but the same expenditure in a scenario would also not go under ISD, depending on the facts of what exactly is the usage or what exactly is the purpose for which that particular thing is being taken. Similarly, you take an example of marketing. So marketing, let us say if you get the bills from the dealers, incentives, or do something. So if it is all the dealers are raising the incentive bills with GST to the HO, obviously it's for all the locations, marketing for all the locations, then that should go under ISD. But whereas let's say dealers raise a bill to the respective location themselves, then it doesn't go under ISD. On the contrary, let us say it's if the entire thing is there as a separate marketing team or a marketing support function, which is not done through a dealer, but internally it is done, then there can be different scenario of IGS that can come into picture. Again, within that, we can look at product specific marketing if it is there, or is it for the only those products which are manufactured at those locations? Should we get into those aspects? Sponsorships, regional level marketing. Sometimes the businesses would have their own marketing shares. So sometimes the marketing thing is totally outsourced to a separate company. So basis that this breakup or bifurcation is required to be done. So similarly, legal expenses. There was a question whether legal expenses should be cross-charged only to the location where the court or the tribunal is there, where the legal issues are. Need not be. Need not be. Sometimes it is possible that the legal dispute that is happening is on the brand as a whole. Then it's not for that specific location. It is actually first thing a common for all India. And I'll come to the attribution part later. Currently, we are only trying to understand what is common and what is not common. How to attribute, I'll come to it later. Then there are some employee linked expenses. Again, this is very, very critical. See, employee linked expenses, telephone, internet, employees may use various other things which the companies provide as a service. It is very difficult to get into what is the job description of the employee. Okay, he's a marketing employee, so it is common. Okay, he's a production employee, so it is for only these two manufacturing plants. Okay, it is a sales employee, so it will go all my sales locations. Extremely difficult, extremely difficult. The moment there are employees located all over India, the expenses incurred at all over India for employees are specific to those places, are not common. However, if the cost relating to all the employees related expenses is coming only in HO, for example, insurance. In some cases, the insurance for all over India employees, the cost only comes in HO because we want to have one single deal done with the insurance company for company as a whole. In that case, it becomes a common. Whereas, let us say telephone, internet, where each location is incurring expenses, those things need not get into common. Correct? Again, this needs to be looked on facts of each case, but I'm just trying to give you principles on how you need to derive what is common and what is not common. And then you need to also look at the third bucket, which I told, our shared service center. If you say, okay, I am not taking the legal service, I'm not taking the service of a third party advocate for my branches. The service of the third party advocate is taken by my legal department. Legal department will take the opinion. Legal department will decide whether this opinion is to be implemented or not to be implemented. And accordingly, legal department then provides a support to the respective departments, whether to contest, not to contest, or what is to be done. Then the same expenditure can also be called as IGS, that is internally generated services, because I've told the definition of service is very wide, and schedule 1, which says that transactions or activities between a related or distinct persons would be deemed to be supplies, again having a wider implication. So basis that, one needs to evaluate whether expenditure will go under internally generated services as a cross charge. There is a supply of service happening, or it would go under ISD as a common attribute or as a common thing that has been taken for or on behalf of other locations, or it is a specific to each location. There are employees in that location, there are employees in this location, and respectively they are incurring the expenses. Little bit common here and there, no need to get into ISD. As a principally a view can be taken. And again, when a view is formed in these situations, many a times we need to form a view basis predominant aspect, because if you go to each and every bill and each and every transaction, you will never be able to conclude. I have a scenario of a client where the question came is when there is a hoarding at the airport in Hyderabad, whether that would be common or not. Somebody told that it is not common because it is written in Telugu, in a regional language. Nobody can read. Then somebody told that no, the people who are traveling, the Telugu people are also there in Delhi and Mumbai. So when they travel to airport, they can read. So when you go into this too much nitty-gritties, I'll tell you the entire implementation of ISD is actually not possible. The two points which we need to keep in mind when we are trying to bucketize our expenditures into common or IGS or ISD is point number one is today the entire indirect tax team of a company, consultants are applying their minds and properly doing the implementation of ISD. We are doing this as a project, but once this is implemented and gone down into the businesses, do you really think month on month the compliance team really have that much time, effort, and intelligence and understanding to implement the way the complex structure that we have brought? Not possible. It will fail. Hence, any implementation of ISD, first and foremost thing should be go towards simplicity and don't complexify the entire thing. One. Second aspect in this entire framework of implementation is we need to also see that by implementing ISD, we are not saving any revenue for the government. We are not giving any extra revenue to the government. It is neutral, correct? So a conservative position is more preferred when implementing ISD than an aggressive position, because we should try to take a position where the litigation chances are least or the litigation risk is least. Hence, it is good to distribute an ISD. When a question comes whether to distribute or not to distribute, a scenario could be better to distribute because the chances of risk comes down or the litigation chances comes down. Having said that, I'm not saying that your entire indirect expenses in a P&L you put in ISD. No, we need to definitely apply our mind. Having said that, don't get into too much of, I've seen cases, businesses trying to look at job description of the marketing employee. Okay, he is a marketing, he is common, he is not common, he is Maharashtra, he is Delhi. What is this? I don't know. So go for simplicity, go for conservative implementation. I can tell 10 scenarios, and all 10 scenarios when it can be IGS, when it can be ISD, when it can be specific. So facts of each case needs to be looked at more closely, is what I would say. I've just tried to give some examples just to give a perspective on this. I'm sure there are a lot of questions that have come. We'll take up in the end. Yes, Nandini. So I have been successfully able to complicate this.
Yes. So I'm telling yes because yes, there is same transaction. We're able to look at different answers to the same situations or different for different perspective what you've given, sir. So now we've identified what is office. Now you've given us examples of what is common expenses, which could be the ideal common expenses. Now I have a person who's identified. Now I have a credit. Now how do we distribute it? A specific mechanism, of course, is given in this rule, but it still have various interpretations which is open. Like turnover, current year, previous year, operational. So how do we distribute? Can you just put some impact on that, sir?
Yeah. So now that we have identified what is common expenses, now we need to attribute or distribute this common expenses to our locations, correct? The law uses the word input services attributable to a recipient. What do you mean by attributable? I'll come to it a little later. But for the time being, you just keep this in mind that there is a word called attributable to a recipient, which I need to distribute to those recipients. The distribution mechanism is that if an input service is attributable to a specific recipient, it has to be attributed to the specific recipient. If it is for multiple recipients, it has to be attributed or distributed to those multiple recipients. If it is attributable to all the recipients, then it has to be distributed to all the locations pan-India. The attribution, the calculation has to be based on the turnover of the previous financial year. Turnover in the state of the previous financial year. Here, I would like to emphasize that turnover would mean taxable turnover, exempt turnover, non-taxable turnover also. So if somebody has got, let us say, into the business of sale of alcoholic liquor for human consumption, sale of petroleum products, sale of land, all those things also get into the meaning of the term turnover and become part of your denominator. Sometimes we see that in head office, especially in the corporate offices or where the treasury function sits, there will be big interest incomes that come. So we need to see whether that also fall in the meaning of the term turnover. Sometimes in head offices, this securities and derivative transactions will be there. So, and we need to see whether that comes in the meaning of the term turnover. And again, derivative transaction, whether we need to take full turnover or 1% or not to cover, all those things, are the questions that can come because it says taxable as well as non-taxable turnover. Very interestingly, they have mentioned that only the distribution is required only to the locations which are operational in the current year. This is very, very, very important. There can be a business scenario where last year there was a turnover. It was also operational last year. But this year there is no turnover. But GST law is saying basis last year you distribute. But this year that branch is not operational. If I distribute the credit will get blocked. Hence, we can exclude that based on this particular line, basis the fact that that particular branch is not operational. Although there is a turnover in the previous financial year, we can still exclude that in our calculation since it is not operational in the earlier financial year. In the current financial year. Similarly, there can be exactly a reverse example. A branch which was not there in the previous financial year, but it has started in this financial year. And if I don't distribute, then I need to pay GST in cash. For that also they have mentioned if there are, all the locations does not have a turnover in the previous financial year, then you don't get into the entire previous financial year. You just look at the previous quarter. Just look at the previous quarter and distribute. So it is possible that basis that maybe first quarter could be a problem, but from second quarter onwards, those credits get attributed and the cash requirement does not come into picture. So to that extent, law has given the flexibility. Ineligible input tax credit also needs to be distributed separately. This is very, 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 very important because eligible input tax credit is distributed, but ineligible input tax credit many times in the businesses, it straight away goes as a cost in the P&L. GST department says if it is a cost, then it is a direct revenue implication to the respective state. Hence, at one time, as you say that eligible credit is to be distributed, similarly, ineligible input tax credit also first must be availed, distributed, and in that respective GST registration, you go and reverse the input tax credit, but it is mandatory to even distribute the ineligible credit. You have to avail, transfer, distribute, take in that registration, and then reverse from that particular registration. IGST, CGST, SGST has to be separately distributed. Whether ISD invoice, you need to raise an e-invoice. Answer is no. E-invoice is not required for the ISD invoice that you raise. So no IRN number. It has been clarified in a FAQ. Any additions or reductions that you would have to do for the original distribution, that can be done by way of a debit note or a credit note. Let us say you were to distribute 100 rupees, but you wrongly distribute only 80. Balance 20 you distribute through a debit note. Only issue is the earlier 80 must have got distributed in a different ratio. The rest 20 might get distributed in a different ratio. That is possible. Whereas, as far as the credit note is concerned, let us say you were to distribute 80, but you distributed 100. Or you have distributed later, the supplier has given a credit note, hence you also need to reduce that. That 20 has to be distributed in the same ratio when it was originally distributed. So it cannot go in a new ratio. The ratio of turnover, you should go back to the earlier when it was originally distributed. Hence, many businesses don't maintain a tagging of credit note to the original invoice, especially in case of vendors' invoices, because that is now not mandatory to be disclosed in the GST returns. It becomes imperative for you to have a tagging of the credit notes received from the vendors to the respective invoice, so that whenever a credit note comes, you can reduce that basis the ratio of the original invoice. This is the meaning of the term turnover, which I also explained and covered this also in detail. Yeah, and then this is the mechanism of distribution. So if there is an IGST, if it is in the same state, if you're distributing, let's say Maharashtra, then CGST must go as CGST, SGST must go as SGST, IGST must go as IGST. Whereas let's say Maharashtra to Delhi, then CGST can go as IGST, should go as IGST, SGST should go as IGST, and IGST should go anywhere as IGST. So interstate, it is IGST, intrastate, it is the same tax. That's how you need to distribute. There is an anomaly between the act and the rule. Act actually gives a wider this thing, but by rules, they have restricted basis this particular mechanism. So I think the portal is also in line as far as this is concerned. Now let me come to the word attributable. Correct? I've kept that hold when I talked about it under Rule 39. Now that you've identified what is common, you need to decide whether this is common only for Maharashtra or whether it is common for Pan-India or whether it is common for only these respective states is a question to be answered. There, the term attributable is used. And when we read, again, the term attributable is not defined in the GST law. So we have to read basis the general English meaning plus some legal meaning. So the term attributable is something having a wider import. Even a casual connection comes in. Even a proximate cause comes in. So it is more relative and wide as far as the term attributable is concerned. So it is possible to take a view in multiple scenarios that a particular expenditure, once is common, is to be attributable to all over India than only to respective states. Just to give you an example, let us say that there is a royalty. There is a royalty basis the number of goods manufactured. One can take a view that, okay, this is royalty only for manufacturing the goods, hence I will attribute this only to the manufacturing locations. Correct? But then ultimately the manufactured goods are also going to the respective states. And from there is a supply which is happening of those goods as well. The manufacturing goods are not only restricted to that particular state, it's going to the other goods, other states as well. And hence, should there be a wider implication of the term attribute is a question, that needs to be looked at to go for pan-India this thing. There was this judgment in the past because see, under the erstwhile service tax excise regime, also this word was attributable only. The language used the word attributable in the earlier law also. So there was this question of this Sabena dish bar. The Sabena dish bar, the advertisement expenses of the Sabena dish bar, assessee is actually, considered in our ISD. Department told that this is only for the, Malur unit in Cuttack. Hence, this is not common and should not be attributed to the Chennai unit because this is manufactured in Sabena dish bar is manufactured only in the Cuttack location. But the court tribunal has held that distribution of credit is for the advertisement of product which is not at all manufactured Malur unit, therefore cannot be accepted. Hence, because it is sold all over India. So like that, a view has been taken in the past. A more liberal, a more wider meaning is given to the word attribute. Similarly, one should understand and remember the landmark judgment of Coca-Cola, where they held that the Coca-Cola manufacture concentrate. So the question came was when Coca-Cola manufacture concentrate and not the actual beverage. So whether Coca-Cola can claim the input tax credit of all the expenditure done on advertisement, because what they are advertising is the beverage and not the concentrate. The court held that, when we need to look at the relationship, this is exactly the word, advertisements or services availed have an effect of or impact on the manufacture of final product and establish a relationship between the input service and the manufacture of the final product. So even a casual connection or a relationship is enough to claim input tax credit. Hence, the point is, there the language was in relation to. So what I'm trying to say is the term attributable has to be read more in the context similar to in relation to and given a wider import.
Got it.
Yeah.
Yes,
Yes.
So now
It's
it's
taking longer. Yes, Nandini.
yes. So now this attribution also is discussed in depth. So can we take a stand that I will pay reverse charge also through my ISD? Can I pay a reverse charge through my ISD if that is common?
Reverse charge ISD as a mechanism is only brought to distribute the credit, as the name says, input service distribution. One cannot pay the taxes under RCM through ISD. Hence, government has introduced this rule 54(1)(a), where in fact now it is also part of section 20. Also they have brought this, and also in rule 39. And of course, the mechanism is given in rule 54(1)(a), the invoice contents and all those things. Wherein, if it is ISD, although it is common, you need to first pay the taxes in your regular GST registration, take the credit in your regular GST registration, raise a 54(1)(a) invoice. It is not a regular invoice. It is a mere, I would say, arrangement given in the law to push the credit to ISD. The credit gets pushed into the ISD. From there, you can take the credit and then distribute to the respective locations. So this is how one needs to do as far as ISD is concerned. How do we push the credit from regular GSTN to the ISD GSTN? Ideally, government should have given a special mechanism. Since they have not given, the only mechanism is through GSTR1. Since it is GSTR1, you need to disclose these details in GSTR1, push it, and then the ISD number, you take the credit. Whether IRN is to be generated or e-invoice is to be generated for this 54(1)(a) invoice, strict reading of the law, it is not required because it is not a supply of goods or supply of service. You are raising this bill only as an arrangement to move your credits from the main GST number to ISD GST number. However, to avoid disputes from the department, because department nowadays does a simple reconciliation. They will do your e-invoice versus GSTR1 reconciliation and raise unnecessary demand. It is suggested to generate e-invoice and IRN to avoid any reconciliation based disputes as far as this is concerned. Hence, there is no requirement to suggest or inform your RCM vendors to raise bill on ISD. Please don't do that. Let your RCM vendors, even if it is common, let your RCM vendors raise bill on your regular GST registration only. Many times these businesses would have cross charge from the global entities. That cross charge bill from the global entities, let it come to your regular GST number, not to your ISD GST number. So that's as far as so that is what as far as reverse charge mechanism is concerned. You need to do this arrangement, because what happens, you cannot pay through the regular number. Since you need to pay through regular number, hence you need to push. That's the logic for RCM. I hope it's clarified, Nandini.
Right, sir. Right. So can we not apply the same principle for any of the forward charge invoices? Can I not apply 54(1)(a) for regular invoices then?
Okay, yeah. So that's a very interesting question. So what Nandini is saying is, sir, whatever you have told about ISD is RCM is fantastic. My regular vendors, despite me saying them, Arey Baba, you give me the bills in ISD number, but they continue to give me the bills in my regular GST number. तो आपने इतना अच्छा फॉर्मूला बताया that यहाँ से लेकर push कर दो, तो I will use this formula even for my regular expenses also, is the question which Nandini is asking. Now to answer this question, we need to understand and go down into the depth of why this 54(1)(a) was introduced. So 54(1)(a) was first brought by way of 25th GST Council recommendations. There, while giving the recommendations, they have mentioned that this is to be done for the scenarios of reverse charge mechanism. There was given this is an instance in which this difficulty is there, and hence this 54(1)(a) is brought as a special provision. Whereas this is only the recommendations, where the lawmakers in their all wisdom actually implemented 54(1)(a). When they brought rule 54(1)(a) in the GST rules, they did not restrict only to reverse charge. This is what is 54(1)(a) as it is. When we read this 54(1)(a), oh sorry, I think I've wrongly put a wrong slide. I put 54(1). Sorry. So Nandini, maybe in the subsequent we can add that slide and share.
Yeah.
When we read 54(1)(a), it doesn't say that the special case invoice is only for RCM. It says it is for all invoices, any input service. Hence, GST Council recommendations are only recommendatory, not mandatory. What is more importance of or prevalence of is the actual text of the law. Actual text of the law does not restrict this only for reverse charge mechanism. When we also see this 54(1)(a) as a rule, when it was introduced, it did not draw the powers from Rule 39 or Section 20. It drew the powers from Section 164, and Section 164 can be brought on to address some special situations, some special scenarios as the lawmakers deem fit. Hence, nothing bars, when I read 54(1)(a) as it is, nothing bars me in taking all my regular GST registration numbers, regular expenses also, first in my regular GST number, from that moving to ISD, and from there, distributing. Having said that, this is a view possible to be taken strictly reading. We suggest that this view is taken with caution. As a stopgap arrangement, certainly this can be implemented, wherein let us say for next 3 months or 6 months, you are finding it difficulty the bill has come in my regular GST number. I would suggest we can use the 5418 tool as a mechanism to shift it to ISD. But our suggestion in a larger way or in a long-term scenario is to ultimately see that entire things in full-fledged routed only through ISD.
Got it, sir.
However, just a few more things, Nandini, relating to this 5418 since we started the point. I have some points to share. Since what I am transferring through 5418 is not a supply, it is only an arrangement, it's only a mechanism. Hence, it would lead to a scenario where you would come to know about this thing, what has to be distributed only on 11th or 12th or 13th or 14th of the next month with clarity, with matching done. And then you would have to raise bill and distribute. And before that, if you utilize, because on 20th you are filing your GSTR 3B return, so your credit may get utilized. Hence, if you are following 5418A, then it is recommended that you hold that credit for 1 month to avoid any interest implication. Either you retain the balance in the electronic credit ledger, because otherwise a scenario may come where you may utilize the credit and then distribute. It cannot be a scenario where you utilize and then distribute. You need to first distribute and utilize in the ISD this thing. So, or you can keep the balance in the electronic cash ledger. We recommend better approach is to keep that credit as it is, because the lawmakers tomorrow may say that interest is not applicable. That is fine, but you have already utilized the credit. So how will you distribute something that's already utilized? That's a question may come. Hence, it is better to keep that credit itself as lying in the balance in the electronic credit ledger as a better way when somebody is doing 5418A. Again, 5418A, even in the regular scenario, as I mentioned, would only happen through GSTR1. But for the purpose of Rule 42, Rule 43 reversals, or for the purpose of calculation of export refunds, please don't consider this as a turnover, although it is going in GSTR1, because this is actually not a supply. This is only an arrangement to move the credits from the regular GST number to ISD GST number, which is legally possible. But just exclude them while doing all these calculations, Rule 42, 43, and all those things. Remember that when you are applying 5418A for regular transactions, there will be 1 month lag in utilizing of credit. To that extent, there is a working capital blockage. Yes, Nandini.
Yes, sir. So while this we discussed for reverse charge, we discussed this for eligible credits. What about ineligible credits? Can we do ineligible credits through 5418A, or what is the mechanism if I make it through ISD?
Yeah, so ineligible credits, we have already discussed that, they have to separately identified and separately distributed, because that has a direct revenue implications. Even 5418A you can do through 54, even ineligible credits you can do it through 5418A. Only caution is when you are doing this ineligible credit, you are first taking the credit in the main GST number, transferring it over there, and from there again distributing it, and then again you are reversing it. So tomorrow department may dispute that you have taken ineligible credit. Hence, it's important to have proper documentation, suggested to have separate bill of ineligible credit, separate invoice, ISD invoice, keep it separate for ineligible credit so that you can do a one-to-one matching. And like that, you can do a segregation and do it. So keep proper HSN service accounting codes descriptions properly, and even ineligible credits can be distributed through 5418A. And when we are anywhere distributing ineligible credit, whether through 5418A or directly through ISD, keep a separate invoice for ineligible credit, have that clear bifurcation with the values and the taxes, so that tomorrow department, when they do your audit and say, array, you have taken ineligible credit, you should be able to say, okay, look, I've taken here, but I've reversed. in my other GST number that you should be able to explain. That's important. Sometimes it is possible that eligible and ineligible both come in the same bill. In that case, you need to segregate only to the extent of ineligible, and accordingly you raise ISD invoice only for the ineligible. Accommodation for food and all those things are very, very common. This thing. One of the things in ineligible credits when we distribute, one situation that we are seeing in our clients' businesses is that the moment, see, generally what happens, the moment you tag a particular expenditure as ineligible, it straight away goes and sit in your cost. It goes as an expenditure in your books, or it gets capitalized in your capex assets building. Then the law says you need to first claim the credit, distribute, and again over there you reverse. The question that comes is, in my books, I've already given a tag of a particular tax code, and it has gone and sat in that particular cost center. I cannot again take it back. And if I take it back, my each cost center is a separate division altogether, and their MIS would get impacted. In that situation, there can be two ways. One can be, we can create a temporary GST and GL where fictitiously this credit is added and again reverse in the other GST registration by way of a JV. But sometimes in businesses, even creating a GL is a task. You need to go through layers of permission. Then the only way is to do it in Excel sheet. I'm sorry to say this, I don't recommend the Excel sheet, but that's the only way to do it. And the third way, which is the most complex way, is the expenditures that has gone and sat in the respective cost center. First, remove that, distribute that credit, and again put that back into the same cost. Take it back to the same cost again, which is leading to a lot of problems in businesses when they're practically trying to implement this in their actual systems. So depending upon how your accounting system is, you need to take a call on that. And then obviously whether 16(4) time limit applies to the ISD invoice, we feel it is not applicable. That is applicable only for the invoice that comes from the vendor. Having said that, we don't recommend that you would wait for 2 years to claim the ISD credits. Yeah, but the time limit is not applicable. Yes, Nandini covered this part.
Yes, yes. So ineligible credit distribution, then what about related parties? How do we read between input service distribution with related parties?
As far as related parties are concerned, there can be, as we discussed, there can be a scenario of IGS versus ISD, internally generated services versus ISD. As we all know that the employee cost is anyway outside IGS, that is not liable. And third party, if it is for or on behalf of this thing, that would anyway go as ISD. So then what remains is only the, one is the pure supply of service, which is done together jointly as a support function from one another, which should go as a business support service under the cross charge mechanism. Otherwise, ISD is same. There is no difference between ISD for related party and ISD for unrelated party. It is same. Only thing is when you go IGS, then the related party, the valuation kicks in. And it goes for open market value and all those things. Very important, if you are eligible for full input tax credit, then the valuation norms are very relaxed. But if you're not eligible for full input tax credit, then the problem comes, say, let us say in healthcare industry, in energy industry, in food industry, where there are a lot of exempt supplies. This issue comes in a big way, because the question that comes is, how do you interpret the recipient eligible for full input tax credit? Should that be qua the transaction or qua the person? In our view, it has to be qua the transaction and not qua the person, because otherwise it would be kiosk. Even if some small exempt transaction would lead to all valuation issues. Let me tell you, these issues department would definitely raise in future, but I'm saying legally all these are contestable matters. There are businesses who are also trying to do planning around whether to go for IGS or ISD, because there's such a thin line of difference. This is more beneficial when there is accumulation of credit. That is more beneficial because there is no valuation here. Here we need to distribute. So all those things are there. I'll not get into this. Legally, all these things are justifiable. Basis facts of each case, one needs to see. Very important phenomena I want to bring in just a question. To be very honest, even I don't have an answer to this question, but I just want to still raise a question. When we do ISD, let us say the manufacturing location is doing ISD to all the branches for common input services. And the same manufacturing location also supply the goods, stock transfer of goods to all the locations. The value of the goods the manufacturing location is supplying to the branches also includes the overheads cost. It also covers the overheads. Cash for certificate, you can take the cost of goods at which you are supplying to the other locations, the value that you have assigned. It also covers overheads. That's how you determine the value when you're moving goods, when you're doing stock transfer from your manufacturing to the depot or godown or your warehouse branches. Once the common overhead expenses are already covered as a part of my cost of goods transferred to the branches, where is the question of again doing ISD? Is it something that we are doing entirely duplication? Is a question that we need to ask. I would say in a very, very specific business scenarios, one need to really look into this aspect as to at what valuation you are moving your goods, what is covered in it, what is not covered in it. Do you take cash for certificate? What is the basis of those cash for certificate is something as a preparatory work for this during this ISD implementation one need to do. Yeah, so this is what, and there's one more thing on the related party transaction. Sometimes there will be a group. In a group, there will be multiple companies, and then one company will have multiple registrations. And there is, let us say, a common expenses, say head office rent. In a same head office, there are 5 companies, and one of that 5 company has 5 GST numbers. Now the question that comes is, first, do you first bill to the head office having 5 GST number, distribute, and the balance you bring it to the balance related parties, or entire 100 rupees you bill here, and also entire 100 rupees you bill do a cross charge to the related parties? Is something, a question or a dispute that comes in case of related party transaction when the entire thing is as a group commonly used. Because related party transactions continue to be under IGS. Related party transactions continue to be under cross charge. Related party transactions are not covered under ISD. Please understand. So to the extent of commonly used by the other related person, you need to do cross charge. To the extent of commonly used by the other distinct persons, you need to do ISD. That's what remains as far as related parties are concerned, Nandini.
Got it, sir. Got it. Can we go to certain specific issues which are broader, like how with ISD 180 days, how with ISD the rule 42 compliances, some certain specific questions if I'll be able to ask you.
Yeah, so this is a summary of whatever that we have discussed. Of course, very, very summarized way we have given it here. Then let me just look at some specific issues if there are. One is Rule 42, Rule 43 compliance. That is reversal of common input tax credits for apportionment to the taxable and exempt has to be done at a respective location and not at the ISD level. So once you distribute through ISD, after distribution in the distributed recipient GST registration, you need to apply the Rule 42, Rule 43 calculation, not in the ISD registration. Whereas, if the payment is not made to vendor within 180 days and you are required to reverse the input tax credit, that reversal you need to do in ISD registration and not in the respective GST registration. This is how the law is drafted. There is one issue in the case of SEZ, because in a case of SEZ, it is all zero rated supply. So ideally speaking, it should be zero rated, but ISD does not bring in the concept of zero rated. Hence, in case of SEZ, it is possible that although it is zero rated, but still you end up distributing and there is no other option but to claim refund. So they've still now did not come out with any advisory or clarification saying that in case of SEZ, since it is a zero rated, don't distribute like that. They have not mentioned. Like GSTR 2B, because GSTR 2B, unlike GSTR 2A, is static. It is not dynamic. Government should also introduce GSTR 6B. They have till now come up with only GSTR 6A. Maybe they did not think about it, but yes, GSTR 6B is not in place. How to do temporary reversal, permanent reversal in ISD to be done, all those things Nandini will cover when we will go into the step-by-step how to file the returns. We need to take separate GST registration for ISD. ISD will be a separate jurisdiction. It need not be the same jurisdiction. It can go to separate jurisdiction also. There will be separate audit, separate investigation, separate scrutiny, separate assessment for ISD also. So you will have more departmental audits and more entertainment. How to deal with incorrect distribution? Any incorrect distribution should be corrected only by way of credit notes or debit notes. Rule 54 bane, I've already mentioned. What if vendor has wrongly issued on my regular GST number instead of ISD? The only weapon that we have is Rule 54 1A. What if the vendor wrongly gives in ISD instead of regular? आपने इतना ISD बोल दिया, वो उसने regular भी ISD में डाल दी. There is no solution as I see. Correct, Nandini?
Yes.
I think only thing is I need to ask my vendor to correct it.
Rectify it.
Vendor to be asked to rectify. How is the interplay between IMS and ISD? I would leave that to Nandini because that is beyond my potential to answer. ITC does not get auto-generate. The moment you distribute, you must be thinking, I have distributed, सामने मिल जाएगा. No, you need to distribute and you only need to go and again claim the credit manually. Both are manually, correct, Nandini? Both are manual.
Yes, both are
So
manual,
all
yes.
these issues of 1-0 extra liya, 1-0 kam liya, and we are now going to see a new reconciliation. Okay, sir, distribution 100 रुपया किया था, लेकिन वहां पे 1000 रुपया ले लिया. So we will have, since the number of reconciliations in GST were less, government thought there should be one more matching reconciliations, and that's what this is. If goods and services are on a single invoice, since ISD distribution is only for services, you need to ask the vendor to segregate and give a separate invoice. You cannot manually break that. There is an overlapping between the date of ISD distribution and QRMP. I think ISD distribution is on 13th and QRMP is on
the same date.
Same day. So I don't know whether they know kaise hoga. I don't know. First of all, who has opted for QRMP? I don't know. That scheme was useless scheme. But if somebody's opted it, then it's a problem. Very important last thing which I would want to mention. ISD as a compliance when we are trying to implement, there are so many variables. There are so many definitions, the words or the terms loosely used, not defined in the law. And when applied to the practical business scenarios, is actually leading to a lot of confusion. Trust me, I never had this much of conflict in interpretations with my colleagues in office as much as I had in ISD, and same goes with when I'm discussing with the clients. Hence, my suggestion is whatever you decide to implement, do it consistently, go slow in the implementation process, be wiser as to what you are doing. Then whatever you've chosen to do, follow it consistently. When in doubt, go for conservative position. And today you may do all sort of project and make a fantastic system. But when you do this, just think that whether it is practically implementable. If the concept or a note or a SOP that you have formed to implement is so impractical and so complex, then the entire structure, even though today implemented, would fall in next 6 months to one year time, because you have so many departments to coordinate with as far as ISD is concerned. So this would be my, closing part as far as what I wanted to.
So if there is a future which we are trying to tell, okay, it has to be consistent. What about the transition, sir? What about the transition issues?
I leave that to you, Nandini. You close this. So I think Nandini has asked me a lot of questions. So now it's time for me to, shoot some questions on Nandini. So yeah, Nandini, I want to ask that question to you.
Okay.
What do you do with the past? Transition kaise karoge?
So few at least which could be seen as where the bill is prior dated, but to be mein nahi aaya, iske liye we've not taken it, but I'm availing it now. But do I, and it's a common credit, so do I have to go ahead again, get it in ISD? That ISD number also was not existing in a past period. Answer is no, go ahead, take it in the regular one itself. Because in ISD, it is, you have to receive the invoice, which is common. So if ISD itself is not receiving the invoice, which is common, then for the past credit, which is though common, availed in 25-26, it has to continue in the regular. Should I do IGS for distribution? Yes, that also needs to continue to that extent. Maybe this is a transition issue up to November, because 24-25 credit will be there. So say if service period is prior, PO is old, but invoice is dated 25-26. Then do I go back to my system, regenerate a PO? Yes, this concern will be there. I will have to give a revised PO because then it is availed or taken in the ISD. But still there is a gray area here. You don't add anything here, sir, where the service period is prior also. Okay. So there is one more issue which could come is if the invoice is in regular, what about the credit note or the debit note? If can that be in the ISD regime? So in my view, it has to be consistent unless and until it's a very complex procedure of PO not getting amended. Let the entirety get closed in one of the GST numbers and then go to the ISD mechanism. I think these are the couple of transition phases.
Yeah. So Nandini, there can be a lot of, maybe I would suggest, Nandini, maybe you can share the screen so that the, the important part of, because you would want to navigate on the returns part about this thing. So 1 minute.
Screen is visible.
Yeah, it is visible, Nandini. So would want to ask that we have done the ISD compliance in whatever way that we have understood. But let us say we have wrongly distributed and we realize it later that the credit is wrongly distributed. What is the manner of recovery that is there? I mean, how department can recover? Should it be recovered in that respective GST registration or from the main GST registration, or how one can correct that, and whether the wrong distribution also entails interest or penalties in the GST law?
This is also provided where if there is a excess distribution which the assessee themselves are able to understand, then the ISD mechanism in the returns, it says ISD credit note. Like ISD invoice is there, likewise there is a ISD credit note. So the distribution to that extent can be rectified in the subsequent month. While coming to the fact that what if there is a correction mechanism which is not known and ISD distributes excess, recovery proceedings will be done in whose GST number? Definitely the recipient GST number who would have availed it or utilized it to that extent. Whether there is going to be any interest penalty on that? Yes, on the recipient GST number, there will be a interest penalty also on the same. Say to which extent this is there. Say I had only received 1,000, but I distributed 1,500. Can I do it? Portal is allowing it. It can happen. Should I do it? Definitely not. So if things like that happens, then this recovery proceedings will be started from the department.
All right. All right.
Yes.
So Nandini, tell me now, coming to more on the procedural aspect. How ISD invoice is different from my regular invoice? And then, we have also brought this new animal 54.1A. So,
Right.
what should be the contents of 54.1A as an invoice? Should that be manual? Should that be system generated? Should there be e-invoice to all this? And how this content is different from the regular invoice? There are three types. One is regular, ISD, and 54.1A. So, can you briefly touch upon those things?
Yes, sir. Yes. So, Rule 54.1 is for an ISD invoice. What does ISD invoice say? It says how much I am willing to distribute. So that is the precise reason this invoice has only the recipient GST number, recipient address. It has the specific series. It does not have invoice value. It doesn't have a taxable value. It doesn't have a rate of tax. All it has is whom I have to distribute, what is the address, what is the type I have to distribute, and what is the tax amount I want to distribute. That is all. Now the issue in this entirety, what appears is the portal gives I need to distribute ineligible credit and I need to distribute eligible credit. Do I have to raise two invoices or do I have to raise one invoice with a itemized? In my view, both is okay. Both are okay unless and until you have an itemization for ineligible distribution of ICS, eligible distribution of ICS. If this itemization is visible in the invoice, there can be a clubbing possible or there can be separation also possible. Both are okay. But this particular invoice does not have to be invoiced also. It can be through your system, but e-invoice is not required. It has to have a uniformity in the series, but it does not have to have the taxable value because you are not distributing the expense as such, but only the taxes. While if we look at 54.1A, 54.1A is for distribution of regular to ISD, and then 54.1 can be taken from the ISD to all other regulars. So what this invoice broadly has to contain is which is the location from which the invoice is going to be there. Then who are the common vendors who have given me to distribute? Say if there are 10 vendors who have given the credits to the regular GST numbers, the details of the regular invoices which have come at invoice level, this has at the item level has to be provided. So it says GSTN of the supplier of the common services, original invoice number of the suppliers. So detailed level has to be maintained over here. So while we saw the ISD invoice, it says how much you want to distribute. That is all, full stop. While if we see the 54.1A invoice, which is HO to the ISD, it has more in depth. It has who is the vendor, what was the invoice number of the vendor, what was common. So next, what else is required over here is definitely whom you have to give the ISD number, the ISD GST number, and all those things. I think this is the more key differentiation of the same. Now coming, yes, sir.
So the invoice part is one. The next point, Nandini, is that yes, we need to do this is common. This is to be attributed. This is to be done. But practically, how do I do it in my system? How do I configure my system? It is very difficult to implement this ISD and do everything manually month on month level because these are the monthly returns. Every month I need to do. So if I want to understand how do I need to implement this at my system level? Can I integrate this at my system level? Do you have any thoughts or suggestions to share on that?
Yes, sir. So one thing is definitely for sure, there is a common thing which is there for all associates who have ISD, that is multi-location. Because this is common, definitely in their system, there will be one key element which is called business place. So if that business place is already there, say they have 25 GST numbers, the 25 business place of 25 GST numbers is already inbuilt over there. So if there can be a 26th GST business place which can be keyed in for ISD, that is a mechanism. Many places this business place is used for their MIS. So there is a hiccup or the hurdle. No, I have 24 states. I can only have 24 business places. So at that point of time, can I have a cost center? Can I have a cost center which is going to tell me that this cost center is a neutral cost center? That means it had the things of vendor expenses comes here and goes out. Only the tax element can be modulated over there. That can be another mechanism. The taxes can be put to this common cost center and the expenses can be gone to another. But this is a very complex structure where if the system allows only then. Or there can be identification through a document type or a transaction type. At least in Tally, it can be added off. But if they have a complex system of SAP, they'll have to have a lot of approvals for taking one document type also to be added. So that at least in these are the tabs which are available for us in our purchase register, right? Business place, business area, plant code, cost center, or a document type. So only one of this can be used. Then for what about future? What about future system implementation? So the team which actually gives the purchase order, can they be instructed? Can they be trained to understand what type of expenses and what type of vendors are common so that the PO level itself this can get resolved in the future. And that PO can be tagged to the respective business place or the cost center which can get identified. Or the last means is to create a different ledger, different tax ledger. Like how we have CGST receivable Maharashtra, same way we can have CGST receivable ISD. If this structure also can be used. So these are the methodologies through which system implementation can be done.
All right. Next, Nandini, if one has to take ISD registration, how they need to navigate into the ISD portal, and if you can briefly say that, and also explain how complex or simple it is if a layman wants to, take the ISD registration.
Got it, sir. So the registration portal is the same. Few key elements I've brought over in the screen to ensure that has been selected. A reason for registration, because there is a new registration in the same state where you have already a regular registration. So the reason for regular can be definitely threshold limit and all. But for ISD, there is a specific tab which has to be selected, input service distribution only. Because if you select anything else, that means you will get a regular registration facility or the feature which we do not want to see. All we want to see is input service distribution. So cleanly select the same. In the course of ISD registration, the portal specifically asks you what are all the existing registrations you have within the state or outside the state. List out all those things. This will help us to establish the allocation what we have seen in the earlier one. Say I have 24. So please provide in this type of registration, the regular one, all the registration number, and you can go on adding. So if you have 24, please go on adding. Next is the registration. We saw what was office meaning. It says all offices. Now we had various office type here as the nature of the business activity carried out in that particular place. So I've seen people choosing 2 to 3 things. Either choose office or sales office, or you or precisely choose recipient of a goods or services, because ideally input service distributor is only a recipient of goods or services. So there is no separate tab otherwise. So sales or office or recipient of goods or office is a precise one to be used. Then I'll take you through what other facilities are there in the ISD portal. There were few questions which I saw in the text also. Why is there a cash ledger in my ISD portal? I don't have to pay anything in the ISD. But cash ledger in the ISD portal is only to the extent of late fee. So if there is a delay in filing of the ISD returns, there is a late fee. To enable that, there is a cash ledger mechanism which is provided. So that cash ledger cannot be used for anything other than this. So this is not for reverse charge. Reverse charge has to be regularly paid and then only allocated to ISD. This cash ledger is only for the late fee. What other features are there in the ISD portal? There is one thing which can be used for communication to vendor, like how we have the same communication with the vendor in the regular thing. We have the same thing for the ISD. Say if there is a regular vendor, a regular ITC, but because the vendor thought you've given ISD number, I have to put over here. So this communication can be used to communicate with the vendor to remove it from the ISD portal and give it to my regular number. What other features are there? Can the ISD get a notice? That is one other question. If yes, what type? If there is a delay in filing of notice, filing of returns, definitely there is a notice which can be generated. That is one kind. What about DRC 13? If there is a vendor non-compliant, there is a third party who gets a notice so that if there is any money which is withheld, directly paid to the government. The DRC 13 so next, normally we used to get this DRC 13 invoices in the regular GST number. So because the vendor would have passed on the credit through the ISD, the department officer will have that as a detail. So the DRC 13 notice in the later stage will be coming in the. My screen is small this year.
Right side.
Achha.
But it's visible, Nandini. I mean, I think that slide, next slide is also coming in that thing only.
Achha. Okay. Okay, that is visible. Okay, so these are the few notices which can be come to the GST portal. So do we have to look into our GST ISD portal also on a regular basis to check for notices? Yes, that also has to be done. So that can be added in our checklist for review in the weekly review. So next, I would want to take 2-3 slides of the ISD return process. Sir, any questions till now, or do I go ahead?
Yeah, you can proceed, Nandini.
Okay.
This we can probably understand the return filing process, a bit more step by step, and more importantly, how this matching is to be done. That's very critical because the 6A is a new thing that has come in. So, when to do what and how one has to input details where in their returns. See, but Nandini, you need to still look at your display settings now. Just go to your display settings because it's actually pretty small.
Is it okay now?
Yeah, now it is perfect. Yes.
Okay. Yeah. Sorry. Now. The first step for doing the ISD returns is understanding whether my vendors have passed on the credit to us properly and through which I will be able to do it. So when I go to the ISD return, there is 2 particular tabs. One tab, it says GSTR 6. One tab, it says view or download GSTR 6A. So GSTR 6A source is through GSTR 1 or 1A, and it also takes the data through e-invoicing. So what data the 6A has is how much B2B or how much invoice my vendor is uploaded in my portal, or how much credit notes the vendor is uploaded in my portal, how much amendment my vendor is uploaded, or how much credit note amendment which is gone. So these are the 4 tabs which is available for us to understand what are all the credits which has come in different means. If we get into any of the particular tab, what will we able to see? We'll be able to see the supplier details, supplier GST number, what is the whether the supplier has filed the GSTR1 or not. So principally one big question which used to come is, when can I know my GSTR 6A? Whether it can be today being 7th of May, or do I have to wait till 11th, or I can only get to know it on 12th? The answer, because there is e-invoicing enablement, the answer is we can get to know on a daily basis also. Whenever your vendor is passed on the credit through your IRN number, it will come back and sit in your 6A, but it will show us the status as whether GSTR1 filed, no, but it will give us the details and it will give us how much is the value and how much is the ITC which is passed on. So what is 6A? It is going to give us the details of the credit which is eligible to us in our ISD portal, when it has to be ideally used completely after 11th. Why? Because somebody can do invoicing and after that not pass on the credit through GSTR1. So we do not want to have that situation. But if we say ideally my 90% of my vendors are fully honest and regular, then e-invoicing based data can be used, and even on a daily basis, I can know what is data is in 6A. That means 6A is still dynamic. It is not like our 2B, it is not freezed. It is still dynamic and giving us the information. Okay, so once we have got the data in our 6A and we reconcile the same thing with the data available in our books of accounts, then the next step is to file our ISD returns. So the first step, if we look at the ISD returns, it has one particular tab called as input tax credit received for distribution. Now, never in our history of 3B, we have given line-wise ITC details. But for the first time in ISD, we will be giving how much of the credit of line-wise we accept of what the supplier is given. So what supplier is given goes to 6A. What of it I accept or it's there in my matching, that also line level we demonstrate or distribute through this table 3. So I'll just take you to table 3. Okay, I've not taken a. Okay. Table 3 will have supplier invoice number, supplier GST number, taxable value, taxes. So we'll have to provide all these details over here. Then definitely this 6A, 6B, 6C is to provide us a capacity to tell us credit notes, which we also accept, amendment of invoices or amendment of credit notes also. So once the credit is there in our 6A, once we also accept the same thing and show or record the same in table 6 of table 3 of 6, then the next step will be able to go. So though there is two tables, one is table 4 and then there is table 5 and 8. As an order of the portal, table 4 is appearing first, but table 4 is only a auto-computed portal. There you do not have to do anything. First, we need to understand how much I need to distribute. So there is a credit, say the credit of 10,000 rupees has come to my ISD. First, we'll go to table 5 and 8 and we will tell out of 10,000, how much I want to distribute to which of my location and how much is eligible and how much is ineligible. So if we look at the table of 5 and 8, it gives us two tabs. One is eligible ITC, one is ineligible ITC. After we go into it, it will give us two more options, ISD invoice, ISD credit note. So there was a question, if at all I have passed on the excess ITC, can there be a credit note which can be passed on? Yes. So that document type at that point of time is ISD credit note. So what data we need to put into that particular 5 and 8 is like our GSTR1. To which of our GSTN we need to pass on the credit, how much is the taxable value, how much is the taxes we need to pass on. Is it rate wise? No, it is not rate wise. I can distribute 5%, 12%, 18% put together. Say I get 10,000 rupees. I can distribute 10,000 rupees for my various state allocation. I don't have to again distribute 10,000 to 5%, 10,000 to 12%. So I don't have to distribute that. So the distribution mechanism is only a one line for one state and it can only be two liner if it is eligible and ineligible. Third, can I redistribute any of the credit which I had distributed in the earlier month? Not like an ISD credit note, but through a redistribution methodology. The table 9 of GSTR 6 can be used for redistribution. Now, most important, if we look at table 4, what is the data or the content it is going to give us? It is going to give us three important factors. How much is the ITC available for distribution? We can see this ITC available for distribution. This data will be flown from my table 3. We recorded in table 3 how much of the vendor invoices we accept and this is the details. So this line item will be flowing from table 3. This is an auto population data. We do not have to do anything. How about B and C? This is also an auto population data. What is the flow of this? This will come from our 5 and 8. We only gave the data as how much is the eligible ITC and how much is our ineligible ITC. So this table 4, the above table, the first table what we see is a fixed table. 4A is from table 3, 4B, 4C is from our table 5 and 8. So once this data is auto-populated, what we get to see is this is the data available, this is the data eligible, this is the data ineligible. How much are you willing to distribute? So in this particular, the below table is for distribution. The SL number 2, what we see again is freeze table. Only this 3, 4, 5, 6 is open, which you can edit and the distribution can happen. Why this is open? Because IGST, how much in IGST, how much in CGST. This distribution mechanism has to be done at a manual level and then put over here. The system does not compute by itself of the best effective distribution. So I've given an example over here. Say we have a credit which is fixed. Say in table 3, we put a credit. We put a credit of IGST of 1000, CGST of 4000, SGST of 4000. And I have to distribute 20% to Maharashtra and 80% to Maharashtra and 20% to Karnataka. So this is the distribution matrix. We generally have to do it and then put it in the table 4 matrix. Say for example, I have a 10,000 rupees credit in IGST. I have to give IGST to IGST only within the state and IGST as IGST only outside the state also. However, I have a 4,000 rupees CGST. I have to give CGST as CGST for within the state, which is Maharashtra to Maharashtra. However, when it comes to other states, see 4,000 rupees is turning into IGST. So this is the distribution matrix which is provided in the rules, and the portal works in the similar manner. Say if we look at this entirety, how much of the amount I had distributed? I had 1000, I had distributed 1000, but in what way? IGST became IGST, CGST became IGST, or remained to be CGST is a matter of importance for doing the distribution of table 4. Very, very important. The matrix does not allow us, the portal auto does not calculate. We will have to understand the mechanism and put it. So that is the important factor over here. Likewise, to only ensure one thing, the totality of distribution cannot be more than the total of the ITC available in table 3. Say here it is 441, which is 9,000. So the distribution matrix also has to be the same. So I distributed 1000 as 1000, IGST 800 only I had to distribute, and again, so this matrix what is there has to be done Excel and then put it up. So I'll just take you through all the tables once again. So first one is to ensure there is a receipt of vendor invoice, okay, and ensure the GST number of the ISD is used. Then the second step is to file GSTR 6A. This is the GSTR 6A. What it gives is only a view or download. After that, we can understand how much of the books data can be reconciled to this. Next, we need to fill the table 3 of our GSTR 6. This is to acknowledge how much of the vendor invoice we are accepting. This 3, 6A, 6B is all simultaneously because it is for amendment and credit notes. Next, we need to fill up the table 5, what we just understood, how much we want to distribute, how much distribution we have to do, to which state and eligible and ineligibility. Next is to confirm the distribution matrix, that is the utilization matrix we just saw, that is table 4. And if at all I have to amendment or do anything, then definitely the amendment tabs are there, or a redistribution tab is also there. I think these are the steps which we need to follow in the same order to ensure the ISD returns are being smoothly filed. I think with this, we are done with the session and the entire scope which we wanted to cover. We can take up questions one by one. Ishita, you would want to then take up the questions.
Nandini, I've answered most of the questions I have already answered, which are there in the chat box. Most of them I've already answered. So maybe, any new questions that can come, that are coming, we can take up them. Or else what we suggest is that you can also get in touch, because deliberately, I am also trying to avoid giving any conclusive answers to very, very technical queries in the session, because as you must have understood over last 2 hours of our discussion as to how complex this entire ISD implementation is. So if you have some questions, you can please still put it in the chat box. We'll try to answer. If not, our suggestion is that get in touch with our respective partner at the respective location. I'm sure with the basis the understanding of the facts, they would answer your questions in detail. So we'll await, you can just type in your questions in the chat box. How regular invoice can be corrected to ISD in case of e-invoices generated? So see, that's what we are saying. there is nothing like regular invoice to be corrected to ISD. You need to move the regular invoice to ISD, transfer to ISD, and from there ISD, you need to raise an ISD invoice to distribute it. But ISD invoice, there is no question of e-invoicing because anyway, you will not generate it. Don't generate e-invoice for ISD invoice. But the regular invoice that you push to ISD, you need to generate e-invoice anyway. That is the answer. If you're talking about 54(1)(a) invoice, in that case, if it is generated e-invoice, don't bother, let it be. Still just, proceed with putting details in GSTR1 and continue with the compliance. Should not be a problem. A taxpayer is registered in 2 states and doesn't have, 1 minute, I think I'm missing on the query.
I'll keep answering. Sorry, go ahead.
Yeah, a taxpayer is registered in 2 states and doesn't receive any common services, only 2, 3 for which they decide not to claim credit. Will ISD if they decide not to claim credit, then what we can say? But then generally what happens, it's not about 2, 3 states. Even if it is 2 states, your statutory audit fee would be common. There will always be, some expenses in business which are common. So it's very difficult to say that nothing is common. But if you decide, okay, what is common, I will not take that credit, but I don't want ISD registration, then yes, you can do that. But only thing is you should be knowing that then you're taking the cost of credit. Mr. Anil says we have taken ISD registration with effect from April 25 period of liability, but registration certificate issued on 5th May 25. But while filing GSTR1, going to file by vendor within date 34/25, system is showing error. Obviously, because it is dated 5th May 2025, period of liability. Correct, Nandini? I don't think April, they'll be able to file.
Yeah,
Looks
no.
difficult.
No.
Yeah, because period of liability is May. So you cannot file, sir. Whatever was to be distributed, do it in May return, both put together. How much to push to ISD in case of 54(1)(a)? 90% is related to HO only. Can we have to push 10%? How much to push to ISD in case of 54(1)? How much to push to ISD through 54(1)(a) if 90% is related to HO only? No. I mean, you cannot decide that at the time of pushing. You need to put all common and push it. Ultimately, what is 90-10 gets done at the turnover level once you do the formula. So you cannot decide. But if only 10% is there of the expenses, only 10% pertains to other location, you just push those expenses. So I don't know. I'm not able to understand your query. You understood, Nandini, this query?
So I think 90% is any which way is indirectly going to come back to me as a regular register number. So do I push only 10%? That's the question.
But still I need to do the compliance. Even if it is 1%, I need to do the compliance. Yes. Ishita says when supplier issue invoice to ISD registration, then who is recipient, whether the ISD registration or the person who actually procured the it's the ISD registration is the recipient. For the purpose of GST law, it's the ISD registration because recipient also includes agent. So ISD is a sort of an agent to distribute the credit. So ISD is the recipient, it will receive the credits and will distribute to the respective location. So Tony says, is separate accounting to be maintained for ISD, only taxes to be accounted and not taxable value? Yeah, only taxes to be accounted to the extent of distribution. If you want to have that separate, code where the taxes are sitting in your SAP. We would like and expect next session if you organize in Hindi, English to better understand in law, language and deeply. I fully agree with you, sir, since it was a national event and we had participants from all over India. That's why we restricted only to English. Sorry, अगली बार हम इसका देखेंगे अगर हम अगर वेस्ट में नॉर्थ में सिर्फ करते हैं तो we can use only Hindi, but since it's national event इसलिए हमने इसको इंग्लिश में रखा है. मे बी आप अपने रिस्पेक्टिव पार्टनर इंचार्ज अगर आप नॉर्थ से हो या फिर HNA के कोई दूसरे लोकेशन से अपने रिस्पेक्टिव पार्टनर इंचार्ज से बात करके आपकी कोई क्वेरीज तो आप समझ सकते हो उसे. थैंक यू. How to consider in case of commission on sales invoices where we have manufacturing plant within 2 separate registration at 2 states? Very difficult to answer this query because I don't want to come to some conclusions on these cases, whether that will be ISD or not, because more factual background is required to be understood to give that answer. 6A is dynamic, it is not static. What if vendor do not upload in GSTR1 but distributed? Can we claim?
Without 6A, no.
No, I think ultimately that matching is required. Even with 6A, that matching would be required. So for that, it has to come in GSTR1. If we have two GSTR in one state, is it required to take ISD? Yes, you need to take ISD. Does the April 25 GSTR 6 ITC will reflect in April GSTR 2B or other registration? Same month only it gets reflected. And on the 13th I filed, it gets reflected. I can use it in by 20th. Correct,
Yeah. No reflection.
Same month, sir.
There is no concept of
I need to go
reflection
and take.
manually.
Yeah, I need to go and manually take in the 3B of the same month and then I can utilize it.
Correct.
In case of dynamic, then which date is considered as cutoff date?
I've answered.
I don't know, sir.
I've
Which date?
answered. Yeah, I've answered.
You answered, right? Yeah. In case of RCM is we need to raise one-to-one invoice or single invoice. Single invoice is also good enough. Just keep separate for eligible and ineligible. Whether the turnover in a state would include the amount of credit notes rejected by the recipient through IMS. Ideally, that should not be because that's something I've rejected. That's not part of my IMS. I would recommend that, instead of getting into what is done through IMS or not done, because law has told turnover of the previous financial year. And previous financial year ultimately gets freezed. Only thing what you're asking is in the next financial subsequently reject that invoice through a credit note, whether I need to still consider that turnover since it is up to 31st March. I think up to 31st March, that still goes as a turnover because the credit note came in the next financial year. Having said that, Ria, maybe I would suggest you share this query over email. It's an interesting query. We would probably analyze that in a bit more detail and get back. Our email ID is there on the PPT. Can we consider turnover of last month? No, at the most last quarter, not last month. Yeah, I think we have answered the rest of all the queries. So good, we have completed 15 minutes early. So first time we have completed session before time. So yeah, thank you all for patient listening. And in case you feel any of your questions are not answered or not specifically answered, you can reach out to our respective teams and they would be happy to help. And we'll be sharing this PPT to all of you over email, provided you've registered your email ID in the link that was shared. Yes, thank you all once again.
Thank you all. Thank you, sir. Good evening.
Thank you, Nandini. Thanks, Ishita, for the coordination and support and also the teaching.
Yes, Ishita, you can conclude it.
Thank you all for once again joining this session. I hope all your queries were solved. If any of the query was not addressed, please reach out to the respective partners of the location. And with all the session and the information shared in the session, I hope that there's a successful implementation of ISD and all your queries get resolved. Thank you, everyone.